Welcome to the daily update. This is being prepared Thursday, March 24th, where we'll look at the action in the market today and then see how things look for Friday, March 25th. I'm using a little bit different audio setup now just to see if I can improve things at all while I'm still waiting to get back to my better quality recording equipment. It turned out to be a pretty positive day, at least for the S&P. We had a strong up day. The only problem is we're right back where we were before, which of course we've been in a range, but I'm talking about where we closed on Thursday was the high for Wednesday. And that may be nothing, but it's still something that we need to look at. But overall, we saw a lot of follow through buying as the session went on, and it turned out to be a pretty positive day. So we did have a flat to higher open. The futures were pointing towards a positive open, and we did get that. And then there's the little jockeying around that happens right at the open. And we did push higher. In fact, we were able to get up to R1 pretty much right off the bat. As we went through the session, we moved pretty much sideways with R1 acting as support. We were able to stay above that, but then we saw some late day buying coming in, kind of a mirror image of what we saw on Wednesday. We closed at the high and we were above S2, and that should be R2. R is for resistance, S is for support. And we ended up closing up 1.43%. The one thing that is concerning, either on up days or on down days, is we are seeing below average volume that is declining day by day by day. So that's kind of a concern right now. Looking at the technicals, we are positive overall, and I'll go through lots of charts to show you that. We're coming up near the end of earnings season. We have a lot to deal with concerning inflation and interest rates, and then the continuing geopolitical concerns that are in the background. We're still out of correction territory as far as the S&P 500. The technicals are positive and improving because we had another up day. We were able to regain the 200-day moving average, and that's probably the most positive thing, at least in a very short-term view. And that also affects longer term, but I'm talking about we gained it on Tuesday, we lost it on Wednesday, we regained it again on Thursday. It's like a pogo stick as we're going up and down on a closing basis around the 200-day moving average. Prices still remain in a range, and we're still getting close to that previous short-term double top. That's if we continue to go higher. We're still dealing with Russia, Ukraine, inflation, which, again, we're not only seeing in our economic reports, we're also seeing in real life. And that also bleeds through into interest rates. And I've been watching the Fed probability, and I haven't been putting those in the daily videos because we're still a long ways away from the next Fed meeting. But I'll probably include that in the weekly video that I do. And then, of course, the things going on with China, the different lockdowns and how that can influence the supply chain that is already having lots of problems. The big economic report, in my opinion, that came out on Thursday was durable goods, and they actually declined a little bit. It's not a huge influence. Sometimes it depends on what part of the economic cycle we're in. It doesn't seem to have much of an influence, as much of an influence right now as sometimes it can have. The current valuation, the S&P by itself is overvalued when taken and compared with other areas in the market, specifically bonds, were more fairly valued. And again, if there's any updates over that, I'll probably do that in the weekly video. The trend is positive, but weakening because we're coming off of a negative trend. Since we had an up day, the bias was positive, and the last number of days have been positive with our momentum. So let's go through, look at the day session. First of all, we'll look at some sentiment just to see where we're at with things. And I like that CNN switched back to the old way of doing things. Maybe people complained. I didn't. I figured this is a free tool, so I don't really have a right to complain about things. But anyway, that's just my own opinion. We're still getting more up into the neutral area. We had been extreme pessimistic, showing extreme fear while we were forming that base. Well, we've come up out of that and we're getting back more towards a neutral reading. And here's the base that we were forming at about the time price was also forming a base, which now we can call it that. We didn't really know that at the time, but now we can look back with a bit of hindsight and say, yeah, that was a base, and we've been climbing up out of that. The VIX, where I've been pointing out in recent videos that if you see these two previous bars and they're really small, we had an up day, the VIX barely moved. We had a down day, the VIX barely moved. Well, we had an up day on Thursday and the VIX did move. It moved lower as to be expected, both on a closing basis and on the daily bar. So that's just showing that as we're going up, there's less hedging going on and there's less fear in the markets. Here's the VIX of the VIX, where it's still pretty much going sideways with what it's measuring, both on the daily bar and then on a closing basis. It came down a little bit, but a little more telling are these daily bars with the open, high, low, close. We look at this every day. This is the Ulcer Index, and this also shows that fear is really starting to trail off and actually dropping below the moving average. The weekly report that we get, and I'll also point this out in the weekly video, is the American Association of Individual Investors. They had been extremely negative for the last few weeks. Well, with the bounce that we've been seeing, they've come up out of that and they're more positive. They're still near the bottom here, but they're starting to react to this move up that we've seen. And then there's the Ridex bull bear ratio, which should be updated now, but has not updated yet. So I'll probably include that in either Monday's video that I make on Friday or over the weekend in the weekly video. Looking at the sectors, all of the sectors were positive. That's something a little bit different than what we've seen even 2 days ago with the up day. We still had some sectors that have been declining. Tech led the way higher. So that's a growth area. And then materials, which is more of a value area, it was also higher, but pretty much across the board with the energy sector, even though it's doing well longer term, it went up the least on Thursday. Staples, which is another value play, it was also up slightly, but every sector was up. We're still showing energy way in the lead. And then in yesterday's video, I pointed out that communications went to last place. Well, discretionary is now taking up the last place caboose area again. Then this is another area to keep an eye on, where this is the tech sector. And if this is going up, that really helps the growth side of things. That's where we see the really big, powerful upward movements in the overall market. Well, we're just right along the 200-day moving average. In fact, we're just a little bit below it right now. We're at 158.31. Okay, we are above it. I'm sorry, where the moving average is at 156.96. So we're just slightly above the moving average. We want to see this continue to go higher if the market is going to focus back more on a growth type of scenario. As this is declining and getting weaker, the market is then focusing more on a value scenario. As far as inflation, the CRB pulled back about 0.5%, but is still in an overall uptrend. We're keeping an eye on the different things that are really causing a lot of inflation right now. Aluminum was up almost 8% on Thursday. Then some of the other areas like gas, it actually dropped almost 1.5%, but is still very high. Heating oil also dropped about 1/3%, but is still very high. Wheat, this is another thing we want to keep an eye on. It's still very high, but did drop 1.5% on Thursday. As far as our technical alerts, they're mostly positive, and even this one right here could be taken as positive because it's the euro and the US dollar that kind of battle back and forth for supremacy as far as currencies are concerned. But the materials sector, they did have a BPI cross above 70. That's positive. When it goes back above, or excuse me, when it keeps going up to 80 and then drops below 80, that is when an official overbought signal is generated. The NASDAQ was able to get above, let's see, 14,000 and then 14,100. The S&P was able to regain 4,500. And utilities, which have been doing pretty well, they actually had a BPI cross above 80. Looking at the intraday chart, the futures looked like we were going to be a little more positive than we were at the open, but we saw pretty good strength for the first 30 minutes or so. Prices pulled back a little bit, which can be expected. That's why I just watch. I don't make any decisions in the first 60 to 90 minutes. Now, if I'm in a long position and we gap higher and that meets my target, yeah, I'll get out right at the open. And the inverse of that is also true. But as far as initiating new positions, I just watch. And then I try to get as close to the close as possible. But that's just my strategy that I personally use. But we were able to get above this line that has been pretty important lately. And we broke through it and then came right back down to it. It acted as support. And we kind of danced around sideways above this previous, well, at the beginning of the day, it was resistance, then it became support. But then this is what's a little more encouraging for the session is we saw some late day buying and we ended up closing at the high for the day and right above R2, as I incorrectly wrote on the slide before. Looking at our chart, we still have a bit of a dilemma here. This is what I'm talking about with a very short-term double top, where we're still dealing with resistance. We have previous levels right near where we're at right now. That's why I have this area shaded out. For this to have follow through positive meaning, first we need to break up through this. Then we have this other short-term double top to deal with. Then we also have R1 right about at that level too. So there's still a lot of overhead resistance that the market needs to deal with. And then look down here, see how every day this week volume has been declining. We're down 5.76% from the all-time high. We did see an advance in growth and a decline in value on Thursday. Here's the two indexes compared to each other, where growth has been seeing a lot of weakness. Well, it broke above its 50-period moving average and so far is staying above that moving average. And then here's the inverse chart where value has been seeing recent strength. It broke down below the 50-period moving average and continues to be below it. Then comparing the NASDAQ 100 with the S&P, we broke through this 50-period moving average. We were kind of right below it, but now we had a little bit more conviction on Thursday. But we still have a long ways to go just to get back to the 200-day moving average. But hey, you got to start small and then get bigger if that's what the market ends up doing. As far as our trend, the ADX continues to decline, but we're still above 20. The green line is advancing, the red line is declining. But until these two lines get pretty far apart and the ADX starts to focus more on the green line than it's focusing on the red line, the overall trend is still weakening. Again, this is not telling us the direction of the trend, it's telling us the strength of the trend. The Arun backed off just a little bit more, but it's still showing the green on top, which means buyers are in control. And we're seeing a decrease in selling overall. But when you compare the two, we are flat, but positive because we are above zero. We're still working off of this printing bottom fisher signal right about the time this was actually generated first, and then not too long after that is when we saw prices go higher. So sometimes this can be a very helpful tool. The signal before, that didn't help us at all. It signaled up in here somewhere and we could have broke through. That's why we were a bit discouraged when we set this double top, because one of the reasons is we had just gotten a signal from this indicator. It let us down this time, but the current signal that we're working off of does appear, in fact, that you can say it is giving us a good signal. Decision point has not changed. Short term, they're looking more positive. They're neutral to negative intermediate and still positive long term. As far as the breadth with the up day, we saw a real advance based on price and volume. Price is still above the moving average and turned back up. Volume is below the moving average, but is trying ever so slightly to recover, but we still have a declining moving average. The advance decline ratio is above 0 and did show an advance. On Thursday, new highs, new lows continued to trend higher as well, based on both of our measurement tools that we use. Accumulation distribution also advanced, and we are above a rising moving average. Short term, we're well above the 20-day moving average, and these are now turning back up with the blue line on top. That's the exponential moving average, and it calculates a little bit quicker. You could make a case to say it would be even a little more positive if the red line would get on top, but you can see where sometimes that was a good thing and sometimes it really didn't matter. The moving average study, we've come off an extreme reading with the 20-period moving average, and we advanced, but with another strong day or two going up, this could get back into extreme territory on a short-term basis. Intermediate term, with the 50-period moving average advanced and the 200-day moving average also advanced. Our spaghetti chart here, it's showing this purple, as these colors are not as defined. We still need to get above the 100-period simple moving average. Other than that, we have now crossed above all of these moving averages. So I know that I say that the 100-day moving average is the least important. Well, since we've been chopping around and in a range, it's become more relevant right now. But we're looking pretty good. We're back above the 200, but we still have, we need to exceed this high if we're really going to look more positive. And I think I said the previous day, actually I meant Tuesday with this. The MACD is positive and climbing. The STO is still picking up that big negativity from the previous day, where it's showing a decline based on price and volume. The McClellan oscillator is now back into extreme positive territory, but it could go higher. Stoke RSI pegged positive. Williams percent R pegged positive. Force index, it's right about here. So it's not pegged positive, but it's coming off of a pretty extreme reading. Intermediate term, we are seeing a cross with the 50-day moving average, and price is above both of those. That's a pretty positive thing, since this is a heavily used moving average. Here's the 100-day, where we still have the exponential, the simple moving average still above us, but we have been able to get above the exponential moving average. The PMO study shows an advance overall and then follows through also to price and volume. This is another potential overbought area where the rising PMO is starting to get a bit extreme. It fell back, well, it's now gone a bit higher. This is another concern. Those that are giving buy signals is also starting to get rather extreme. And then those that are above zero continue to advance. The BPI just kind of went right up to this 70 level, and it's almost like that's acting as resistance. It barely moved on Thursday, and here's the longer term view of that chart. Our rainbow, we're still trying to work our way from the bottom back through the rainbow. We need price to clear all of this, get beyond this double top right here, and then stay there for these moving averages to give us more of a clear rainbow look. This is another short-term issue to be aware of. Stochastics, short-term, pegged positive. Intermediate term, pegged positive. Long-term, getting close to being extreme positive. Then looking back 10 days with our rate of change, we did show an extreme reading, came down off of that. Well, now with the up day, we're back into extreme positive territory. The summation index is climbing based on price and volume. And one thing to note is based on volume, we've crossed above zero. So it's one thing to have these indicators going up or down. It's another thing when they cross either above or below zero. Haven't done that yet based on price, but we have done that based on volume. All of our oscillators are positive right now. Vortex showing a bit of an expansion of buying power and a bit of a decrease on selling pressure. So that's positive. The RSI was up a little bit, is above 50 and advancing. So that's positive without being extreme. The CCI is coming off an extreme positive reading. And then the same indicator calculated on for 20 days is showing that we're coming down out of an extreme positive reading. Here's the standard deviation. Still shows that we are pretty far away from average or standard prices. So that's something just to be aware of, but this could go higher with this indicator. Chaikin oscillator also coming down off of an extreme positive reading. The Chaikin money flow declined a little bit, and sometimes I'm not real familiar with how it's calculated the way it is. It's mystifying to me, but it's still positive overall with the moving average going up. Here's the percent B. The only reason I show this is where we hit the upper Bollinger Band up here. And as we've been moving, we've come down off of that, but with a good solid day, we could get back up to an extreme positive reading. And this is one I don't show all that much. It's the ultimate oscillator. Sometimes it's helpful, sometimes it's not. We're starting to get into extreme positive territory. And then this is another one that I don't use all that much. I'm not a big Ichimoku cloud fan. I know some of you are going to go, what? I mean, that's the silliest thing I ever heard. I live and die by this. That's great. And I hope you use it. I just dust it off when I feel it's actually being helpful to us. But over here, what we are seeing is we could be at resistance. And what we need to see for things to continue positive is price to break through to the upside, and then eventually for this cloud to turn green. Well, that doesn't look like it's going to happen at least anytime soon. But anyway, the part that caught my eye was just that we're now dealing with resistance as far as this indicator is concerned. Our trading systems, the Elder switched back to positive. The SAR remains positive. Our different charts, the Heiken Ashi is still looking positive and showing some nice advances from that base. The Kegi is still positive with the black line expanding a bit. Renko is also showing an improvement. 3-line break. I'm not quite sure what to make of this. There's this little dot right here, but overall, we're still showing an improvement in price. Equivolume is not really showing the double or we've got some very short-term resistance that we need to get through if we're going to go up. Well, because of all the overbought signals, we may fall back a bit on Friday. And with so much uncertainty going on geopolitically and what have you, I'm surprised that people would want to take long positions over a weekend, but that's just me. Point and figure is looking positive. It generated a double top breakout possibility, but since we haven't achieved any new levels yet as far as price, all of the X's are black, but that is a positive signal. We're still above the 38.2% retracement as far as our fib measurement that we're using. Long term, we are back above the moving average. We closed at 45.20. The moving average is at 44.75. If we can continue to stay above that, that will help keep the long-term perspective and trend positive. This is showing the same thing right here with our logarithmic scale. Then as far as the mega caps, the big monster companies, they did have a 1.89% advance, but they're still in an overall downtrend. Then the special K is starting to turn up slightly, and here's the longer term view. Then our moving averages, I'm probably going to take these blue lines off of here because we broke the trends on all three, and we are showing some advances with the 50, 150, and 200-day moving averages. Then looking at the three main indexes that we consult, here's that nasty little, we need to exceed Tuesday's high. If that's possible, we may fall back down. So it's just, that seems to really glare out at me right now. Mid caps also had a pretty good day, but not getting back to any kind of a double top, at least over this week. Small caps advanced, also not really showing a lot of strength right now. The FANG stocks, they were up over 1.5%. They're back above the 50-period moving average, but we had a recent death cross. Kathy had a pretty good day, up over 1% with ARC, but has a long way to go to get back to a positive trend. The Dow is staying above the 50-period moving average. We had a recent death cross, and we have the 200-day still above where current prices are at. Small cap had a pretty good day, but not a real big move here. We're above the 50, still below the 200. And if you notice, both of these moving averages are declining, and we have R1 above current prices as well. Mid caps, kind of right in between the 50 and 200. We're above the pivot, but we want to see more follow through from this, if that's going to give us anything to look at positively or negatively. NASDAQ, it's really been kind of coming back with the most amount of vengeance, but it also had the most amount of damage done to it. We're above the 50. We still have the 200-day and R1 above current prices. Kind of the same thing with the NASDAQ 100. It closed right at the high, had a good day, up over, well, it was up 2.2%. So it was the best performer for the day, but can that continue? Then looking at the Vixen, this is a little bit surprising. Yeah, we saw a decline with the Vixen, but we didn't really break down very much. We're seeing prices try to go higher this way, but we're seeing more sideways action with the Vixen. NYSE, kind of, it'd be nice if all these indexes could take out the high set earlier this week, or we may stall before the weekend and let that be played out next week. But it was able to get back above the 200-day moving average. Then the S&P 100 against the S&P 500, it outperformed, not by very much, but this is showing some of the bigger stocks taking leadership. Wilshire, it's also dealing with this kind of double toppy look. We still have this erroneous piece of data here. We're right in between both moving averages. We would like to see something move higher. Then internationally, China is really trying to bounce. All these markets are bouncing and starting to show some improvement, including the US. Okay, I had to pause that for just a second. I'm still dealing with lots of vocal and coughing issues here. Then looking at our all stocks, and this does include US stocks and non-US stocks, they're kind of not really doing much. They're just camping along the 50-period moving average. This is world stocks that take out US stocks to kind of give us an idea. And I do have a chart which compares the S&P 500 with this index just to show are international stocks performing better or are US stocks performing better? I just didn't include it in this update. Looking at the broad market, the dollar was up slightly. It's been really hanging in there lately. And it's in a pretty solid uptrend. Here's the weekly chart, which will finish after Friday's session, also showing an uptrend. Then oil. It declined 2.25% on Thursday, but it's still quite high. It's still at 112. Gold was up over 1.25%, but we've been here before. We're not really, it's still looking more like a failed breakout at this point. And here's the ETF. Also had a pretty good update, but not really, it's just chopping around. And then here's the longer term view of the gold ETF. Silver, look at this. We are seeing a golden cross with silver. We've been above these moving averages long enough so that that's looking more positive, but we're just kind of spiking around as well. Here's the longer term view of that. Then Bitcoin, it's still in the low to mid 40s right now. You're just not seeing a lot of action right now. Things have really settled down in that market. Don't worry, it'll pick back up at some point and in some direction. We're still seeing a decline of the credits, my goodness, the yield curve. I don't know why I want to call it a credit spread. It's a yield curve between the 2 and the 10. I remembered back to some reading that I've done, and I'm going to put together, I have some charts, but they're not really at presentation level yet. Showing Edward Yardeni, if you are familiar with him. I read everything I can by him, and I've got all his books and reports, and I go to his website. And I would use some of his charts in these videos, and I contacted him asking, can I use them? Because I don't want to violate any copyright laws. And I never heard back. Well, there's some other folks that do videos similar to mine that do use his charts. And I sent them a message saying, has this ever caused you any trouble? And they said no. So I may start to include a few more of those. He says the true yield curve is the 10-year to the Fed funds rate. That's what people should be looking at. And I don't have a chart of that here. Just know that that's going up right now, where we're seeing this yield curve actually declining. And I want to put together some things before I really share that with you. The 30-year yield, we're still above the 50% retracement at 2.51%. 10-year yield, it really broke out, but then I guess it went back up. We're at 2.341% for the 10-year. And then we saw a bit of a decline in the 30. It's still, this is amazing. The 10 and the 5 are just dancing together. Sometimes they come together, sometimes they get a little bit apart from each other. We saw a bit of a decline in the 2-year, but yet a little bit of an advance in the 3-month. Then internationally, we're seeing pretty much across the board increases in interest rates. Bond prices continue to decline, and you could say, we're getting near this support level. Are we going to drop down to this support level? Then corporate bonds showed a bit of an improvement on Thursday. The current yield is at 3.51%, and here's the longer term view of that. Junk bonds, because the stock market had an up day, junk bonds had an up day as well, but are still in a downtrend. Looking at some of our relative markets, gold is just really it's falling back here in this gold to S&P ratio. It looked like it was really breaking out nicely, but now it's coming back. But we're back on the moving average. Will this moving average provide some kind of support? Will we be able to bounce up from that? That's to be determined. And then looking at energy against the S&P, kind of the same thing. It was really breaking out, but we've seen strength in the S&P and some weakness in energy. And so this is falling back. It's still very high. And this moving average is still going up. But I wouldn't call this necessarily a failure. I would just call it a pullback at this point. And then looking at growth versus bonds, where growth has been able to get back above this moving average and continues to go a bit higher. Then looking at tech versus the S&P, still showing some weakness, even though we were up over 1% when comparing these two, but we need to see this get above the moving average, even though the moving average is still ever so slightly going higher. And then we look at tech against interest rates, where tech was up and interest rates were down. So that helped it just slightly. Then looking at the 10-year against tech, just the opposite of what I just showed you, still shows a breakout of interest rates when compared to tech. Then discretionary against staples was pretty much flat, but we've been able to get back above this moving average, but we had a death cross not so long ago, and we're well below the 200-day moving average. Then looking at the S&P against interest rates, or the 10-year yield, is just showing that overall, the S&P has been underperforming interest rates, even though we saw a little bit of a bounce on Thursday. And then this is a new chart because I included another new chart right after this. These are the low volatility stocks within the S&P 500. And when we're getting more defensive, these are the kinds of things that people get into. You notice that after setting the high, yeah, we fell, but maybe not as much as some of the other stocks. And that saw a bit of an advance. Then what we do is on this next chart, I compare the low volatility index with the SPY. And it looked like we were breaking out with low volatility really starting to take over. That's more the value play. Well, now that's been falling back as well. So what's our outlook for Friday? And this is kind of a copy and paste. I've changed a couple of things, but that's about it. We're still out of correction territory. We're in a range. We're near a double top. We're getting close to the end of earnings season. We're battling between growth and value. On Friday, we have pending home sales. And then the one that's probably going to be more important is the final reading. 2 weeks ago, we had the preliminary reading. This is the final reading that we'll get in the Michigan Consumer Sentiment Survey. And then we have the Russia-Ukraine situation, China, and the NATO meetings. Because the president is out of the country and attending these meetings, we always want to keep an eye on that as well. Looking at our different scenarios, not a lot has really changed here. Are we reverting back to the previous trend? It's looking less likely, still possible. That's why I haven't taken this off of here. But are we wearing things off? Is the overhead resistance that we're hitting powerful enough to push us back into a more negative trend? Right now, looking at things the way they are, no, that's not what's happening. But if we have a solid down day followed up by some other down days, and we're not showing extreme fear right now, so there's room for people to get fearful at this point. If we switch that kind of an environment, that could be what happens. It doesn't look likely, but we still have to be aware of it. The other scenario that is probably more likely is scenario B, for things to go down. We are overbought, and going through the charts that I was showing you, there's a lot of overbought indicators either coming off, giving us extreme readings, or if not, dropping back down and actually generating an overbought signal. And then the resistance that I've been referring to throughout this video and pretty much all week. To go up, we are, yes, coming out of that base that we set. Our oscillators are positive. Moving averages When we're above them, they provide support. When they're above us, they're providing resistance. And then this should be Wednesday's high. I should have taken it back one more day. Can we take that out? That's just on a very short-term basis right now. And then the third scenario, which is seeming least likely at this point with our ADX still giving us a high reading, we are still in an intermediate term range, but we're having these wild swings, 1-2% moves up and down. We want a sleepy market for it to be more sideways. We want price movement to slow down, which actually turns into more of a trendless environment. Yeah, that means if you're selling credit spreads, you're not going to bring in as much. But if you're selling credit spreads now and they start hitting your strike prices, you're getting creamed. And I would rather bring in a little less and be safer than get more coming in off the bat from selling those spreads and then have them be in danger. And a lot of times the risk to reward ratio is so against you that when you're right, it's cool. When you're wrong, you get decimated. And those are that I just like to take a more conservative approach myself. So what is our conclusion? We are positive, but in a range. On a short-term basis, we're positive. We are at some overbought levels as well as overhead resistance. Intermediate term, we are positive. Our oscillators are positive. Our moving averages are turning more positive. But as I've been saying over and over, some cases they're providing support. In other instances, they're providing resistance. And then the bottom one here is now we are back above the 200-day simple moving average, and that is positive. So thank you very much. I hope you have a very pleasant Friday. My voice seems to be a little bit stronger than it has been. And so my hope is that will continue. And I hope to prepare another video after Friday and then the weekly video over the weekend.